Have you seen what's happening in the silver market? It's not just the usual price swings. Something big is brewing, and if you're a silver investor, or even just thinking about it, you need to pay close attention. Right now on the Comex exchange, a massive amount of physical silver is being demanded for delivery. We're talking about an unprecedented scramble for real, tangible metal, not just paper contracts. This isn't a drill. The big players are making their move, and it's sending a huge signal about where the silver market is heading. Let's break down what this means. The Comex is primarily a futures market. Most traders there are speculating on price movements. They buy and sell contracts without ever intending to see or touch the actual silver. But when a trader stands for delivery, they're saying, I don't just want the paper promise of silver, I want the real bars. And lately, the number of people doing this has skyrocketed. It's like a bank run, but for precious metals. This is a very rare and significant event. It shows a deep lack of trust in the paper market and a strong belief that physical silver is about to become much more valuable. So, who is doing this? It's not the small retail investors like you and me. This is happening at the institutional level. We're talking about large funds, banks, and maybe even sovereign entities who have the means to demand and store millions of ounces of silver. They're not just trading for a quick profit. They are accumulating. They are strategically pulling physical silver out of the market and locking it away. This move suggests they know something the average person doesn't. They see the writing on the wall, whether it's inflation, geopolitical instability, or a looming supply shortage. They are positioning themselves accordingly. They're treating silver not just as a commodity, but as real money. Why is this such a big deal? Because the amount of registered silver available for delivery in the Comex vaults is surprisingly small. There is a huge mismatch between the amount of paper silver traded and the physical metal that actually exists to back it up. We've known this for years, but now the system is being tested. As these large players continue to drain the physical supply, it creates a massive squeeze. The price of paper contracts can be manipulated, but you can't print more physical silver. When the vaults start to empty, the real fun begins. The entire pricing mechanism could break, leading to a disconnect where the physical price of silver decouples from the paper price and skyrockets. For the small investor, this is both a warning and an opportunity. The warning is that the game is changing. The days of easy access to cheap physical silver might be numbered. The opportunity lies in understanding what the smart money is doing. They are buying physical metal. This isn't financial advice. But if the largest and most informed players are converting their paper assets into tangible silver, it might be a good time to consider your own strategy. Are you holding paper promises, or do you have the real thing? This trend indicates a growing belief that owning physical silver is the safest bet for wealth preservation. In the uncertain times ahead, let us dig a little deeper into the mechanics of the futures market to understand why this is so unusual. The Comex operates on leverage. You can control a large amount of silver with a relatively small amount of capital. This is great for speculators. The market is designed for cash settlement, meaning most contracts are closed out for a profit or loss without any metal changing hands. The delivery option is there, but it's rarely used on a large scale because it's expensive and logistically complicated. You have to pay the full value of the contract, arrange for transportation, secure storage. It's a hassle. So when we see a massive spike in deliveries, it means the buyers are willing to go through all that trouble. This tells us their motivation isn't short-term speculation. They want the metal for its intrinsic value and long-term potential. They are willing to pay the premiums and deal with the logistics because they believe the security of owning the physical asset outweighs the convenience of paper trading. This behavior is a vote of no confidence in the financial system's paper promises. It's a move back to basics, a return to hard assets. These large players are effectively exiting the casino and taking their chips in this case. Real silver bars home with them. This is the clearest signal you can get that the underlying supply and demand fundamentals are incredibly tight. Think about the implications. If the Comex, which is the primary price discovery mechanism for silver globally, starts to run out of physical inventory, what happens? The credibility of the entire system is at stake. Industrial users who need silver for manufacturing and solar panels, electronics, electric vehicles, will have to compete with investors for a dwindling supply. This could create a bidding war that sends prices to levels we've never seen before. The current price might look like an incredible bargain in hindsight. The actions of these large delivery takers are a leading indicator. They are the canaries in the coal mine, signaling a fundamental shift in the market structure. So what should you do? Again, this isn't specific financial advice, but it's crucial to be informed. Start by looking at the data yourself. You can find reports on Comex warehouse inventories online. Watch the delivery notices, see how the amount of registered the silver available for delivery is trending. It's been on a steep decline. Educate yourself on the difference between allocated and unallocated silver storage, and understand the risks associated with ETFs that may not be fully backed by physical metal. The message from the market is clear. Physical possession is paramount. The story of the silver market right now is one of quiet accumulation by the few, just before the many wake up to the reality of the supply situation. It's a strategic game of chess, and the pieces are moving. The big players are taking physical silver off the board. This isn't just another blip on the radar. It's a structural shift with potentially explosive consequences for the price. If you've been waiting for a sign, this might be the loudest one yet. The demand for real, physical silver is no longer a fringe theory. It's happening right now, in plain sight, on the world's biggest stage. Stay informed, stay prepared, and understand the power of holding a real asset in a world of paper promises. Thanks for watching. If you found this information valuable, please hit the like button, subscribe to the channel, and ring that bell for more updates on the precious metals markets. Your support helps us bring you more content like this. Let us know in the comments what you think about this massive run on physical silver. We'll see you in the next video.